Hello and welcome to Finding Genius. My name is Kyle O'Brien. I'm the founder of Startup ROI, a newsletter on French tech and its place in the European tech ecosystem, and also an operating partner at Revaya, a growth equity VC fund headquartered here in Paris. Today we're joined by Sam Levy, the founder and partner of Lauxera Capital, a healthcare-focused asset management company also based here in Paris. So Sam, welcome and thanks for joining today.
Thank you so much, Kyle. Delighted to be here.
Yeah. Well, I wanted to get started with a little bit of background, talk kind of about your personal experience. I know that you were an entrepreneur turned investor, and you have some depth of, or domain expertise rather, in the healthcare and biology space. So can you tell me a little bit about yourself, how you got into this space, and then maybe a quick introduction to Lauxera Capital?
Sure. No, my absolute pleasure. So my name is Samuel Levy. So I grew up in the great state of Ohio. I studied biophysics and biochemistry at Yale, and then came to France really to live for the first time as a Fulbright scholar at the Pasteur Institute, where I did basic science research, a mix of cellular biology and molecular biology. Realized that I wanted to find a path in industry, and so I joined McKinsey Company in New York, where I did 11 engagements, 10 in pharmaceutical and medical products in 7 countries. I thought that I wanted to find satisfaction kind of between industry and medicine, doing oncology. I thought I would do clinical trials with industry, and so I applied to medical school, and I had the luck to be accepted by Harvard Medical School, and so I moved from New York to Boston, and I have a diploma from medical school, but I never actually practiced as a physician, because during my second year of studies with a classmate of mine, I came up with a medical device for weight loss that I spent the subsequent 10 years of my life developing and commercializing. Basically, the product is a balloon that sits inside the patient's stomach and helps them feel full and lose weight. But our balloon starts up rolled up inside of a capsule, gets swallowed by the patient in the outpatient setting, no anesthesia, no sedation, no endoscopy, no surgery. It's a 15-minute procedure. The patient leaves the doctor's office with the balloon in their stomach, a connected scale and a connected watch and a smartphone application. Patients lose about 15 kilograms, so about 30 pounds on average. And then 4 months later, the balloon opens, empties, and passes in the stool. So it was an idea that we had on a napkin, and we built a company around it, and I had the chance to lead every function in a fully vertically integrated medical device company. I built a quality system, I designed clinical trials, ran clinical trials, led the regulatory path, and then launched the product in 25 countries. And it's been an incredible journey. Last year, the company did right around $40 million of revenue, and has more than 100% revenue CAGR since we launched the product in 2016. So I moved to France in 2012, basically for 2 reasons. The first was, at that time, the European medical device directives made it possible to launch innovative healthcare medtech products in Europe before the US. And we knew that our clinical path and our regulatory path was going to really be here first. So I moved here for that reason. I also got married to a French woman who is an ophthalmologist and wanted to continue practicing medicine here. And so I've lived here now for 10 years. In around 2019, I was doing a lot of traveling, launching the Allurion balloon really all over the world. My 3rd kid was on the way. And I saw around me just like an incredible ecosystem of health technology businesses that often lacked a bit of the, let's say, commercial DNA that we're often pretty good at in U.S. companies. And I realized there was a really unique and interesting opportunity to build a healthcare-focused investment firm, not really taking science and clinical risk, but really focused on driving commercial traction, commercial excellence, and value creation through top-line and bottom-line growth. And so with 2 partners, Pierre Moustial and Alex Slack, Pierre is based in Paris with me, Alex is based in San Francisco, we created Lauxera Capital. Lauxera is a healthcare-focused investment firm. We are deploying a 262 million euro healthcare growth buyout vehicle that we raised during COVID. We've made 5 investments to date. I'm hopefully signing a 6th deal today. We'll see if that happens. But we invest. We have a pretty broad mandate. Again, we don't invest in clinical trial execution. We invest in commercial execution. So the companies have to be revenue stage. But we can do minority deals. We can do majority deals. We invest in EBITDA negative growth deals. We can do buyouts and invest in EBITDA positive businesses. And so we're quite flexible, and we're really looking to build category champions with a focus primarily on Europe in terms of geography, but we can also deploy capital in the States, in the Middle East, and Asia.
Okay. Very cool. There's a couple things I noticed, actually. We'll probably get to more detail on some of your portfolio companies, but your background in molecular biology and biophysics, and your focus now has pivoted from like clinical trial medical devices to I would argue somewhat heavy on the software supplementation to the medical field. Those strike me as 2 very different paths of go-to-market. The type of support and commercialization that you'll need. What have you found has been like the biggest difference between launching a product like Allurion that requires a patient to sign up, to go to a doctor? There's a number of follow-up touch points, obviously enabled by technology, and some of the software-driven companies that you're investing in now that are fundamentally different in terms of the product that they're selling.
Sure. So I think with the magic of healthcare products is, once they get adopted, they tend to be quite sticky. And clinical practice takes a long time to change, and the kind of the way that hospitals function takes a long time to change. So it's difficult to get adopted, but once you're adopted, you stick around for a while. And so that's the magic of investing in businesses that are focused on in the healthcare space. I would say that in healthcare investing, whether it's software, whether it's medical devices, whether it's really pharma, it's not a sort of or. It's an and. Like, you need intellectual property, and you need reimbursement, and you need a positive risk benefit profile, and you need the ability to reproducibly manufacture the technology, and you need clinical buy-in, and I think that a lot of those ands that are necessary, maybe individually not sufficient, but necessary to drive utilization, adoption, and sales, are shared across different sectors, like even software as a medical device, and medical devices. And I think one of the kind of phenomenon that we're observing is there's actually a lot of convergence between medtech and software. We have a portfolio company called Care Syntax, which aspects of their portfolio require a CE mark because they're regulated like medical devices. But these are software products that sit inside the operating room. And I would say, in terms of like driving commercialization, yes, like consumable medical devices and software are different. But in some ways, software sales feel a bit more like medtech capital equipment sales, in the sense that it can be a large headline price. You have to align the various stakeholders in the hospital and find a champion. They're different product categories, but the sales process is similar. And I would argue that a lot of success in commercialization, it's nice to have a good product, but if you ask me whether I'd rather have an A+ product and a B commercial execution team, or a B product and an A+ commercial execution team, I'd rather take the great commercial execution team. And when it comes to kind of having a vision for what world-class looks like in terms of marketing plans, in terms of forecasting, in terms of just managing distribution, doing business reviews, understanding the account level details, I think whether you're selling like wine or whether you're selling a medical device, a lot of the kind of basic fundamentals of what great is in terms of people and what they produce is similar. And so, because our firm really, we're a lot of operators that have driven fast growth and have run bigger organizations, we have a pretty good sense of like what world-class looks like and what great is. And that also helps us, I think, when we're evaluating the commercial platforms we consider investing in.
Well, you mentioned earlier that having experienced some of the advantages of particularly in France, the healthcare system and the framework for research and innovation has been useful in your past. How does that play into the way you invest now? I mean, having had experience bringing products to market, having had experience doing clinical trials in France, understanding the nature of regulation. What most people are, if I talk to the average person, they probably have a fear of specializing in healthcare because so many barriers to entry, or typically people mention complexity as it pertains to healthcare. But that seems like it might be for you and your team an advantage with your depth of experience and understanding of the system. So what are the big challenges and complexities in the healthcare system, and why does that, in your case, play to your advantage?
Yeah, that's a great question. It's a big question. I think fundamentally, one of the challenges in healthcare, we're building businesses where we have customers that are paying us, and then we have our cost structure, and we're trying to drive the top line, we're trying to drive the bottom line. It's the same basic idea if we were owning a franchise of fast food restaurants as if we're investing in software that goes into a hospital. I think when you own a fast food restaurant, it's very clear and obvious who the customer is, and it's very clear and obvious what tools to use to market to those customers. In healthcare, what's complicated is that the people that are consuming this, so the people eating the hamburgers are paying for the hamburgers. In healthcare, the people that are eating the hamburgers almost never are paying for the hamburgers.
That's right. Yeah.
There's incredible complexity in terms of payment models. And also, healthcare delivery is extremely fragmented and complex, and it's different in every country. So obviously, there's healthcare that's delivered in the hospital, there's healthcare that's delivered in the office setting, there's healthcare that's delivered in the home, and the payment models and the reimbursement pipes and the way to actually trigger the kind of key success factors for driving successful commercialization varies across all those three different points of delivering care. And it can be difficult to untangle the motivations that actually drive utilization. And so I think let me say it another way. There's a lot of complexity, but once you understand the complexity, it's actually quite simple, usually. But it's just, you just have to kind of know where to look. So right. I'll give you an example. One area where we spent some time recently is in the urology medical device field. And there are some surgeries that have traditionally been done in the hospital that are increasingly being done in the urology doctor's office. And some of the fastest medical device commercial launches in the history of medical technology have happened actually in this urology field. And I think part of it is because of great clinical outcomes, which, and maybe an improvement in terms of clinical results. But another big driver is the fact that if you look in the details of the reimbursement, urologists are getting paid more money in the United States to do these procedures in their offices versus doing them in the hospital. And so that money line of kind of where the cash is being generated and what that means for the different stakeholders also is important. And so the impact is when we consider opportunities in urology, obviously a big consideration is the improvement for the patient, for the healthcare system. But there's no question that if the technology can achieve attractive reimbursement within the doctor's own office, that's a strong catalyst for growth versus technologies that don't sit in that particular domain, if you see what I mean.
Yeah. Well, to that end, I mean, last week we spoke to Jean-Charles from Allen, so we had a little bit of a breakdown of the French healthcare system. But as an American expat in France, having witnessed and gone through kind of the ringer on both sides from a commercialization aspect, what are the biggest differences you see between the two healthcare systems as it relates to building a medical device or a med tech or a software business in the healthcare vertical?
I guess why don't I answer that question by dividing it into two? I think we can talk about development of new innovations, leveraging clinical trial infrastructure at hospitals, and then we can talk about selling to hospitals and those two jurisdictions. So so Europe has a couple structural advantages, and I would say strengths compared to the U.S. on the development side. In medical devices, because of the legacy regulatory environment that made Europe the place to go to for true innovation, there's more infrastructure for doing early feasibility clinical trials in Europe for medical devices than in the U.S. And when you're developing a new medical device, at the very beginning, there's just like fidgety things you got to work out, making the way you hold the device optimal, and you learn things by things not going exactly as you plan. And I think European doctors have a longer track record and more comfort with working with devices that may not be the final version than U.S. doctors. That's changing because the FDA in the U.S. is trying to bring more of the early feasibility clinical work back to the U.S. But for the last 30 years, a lot of it's happened in Europe.
Is that a cultural? Sorry to interrupt. Is that a cultural thing, or is it a regulatory thing? I'm curious.
I think it's a little bit of both. I think that I think it's both. On the software side, one of the structural digital therapeutics side, one of the structural advantages we have in Europe is there are countries in Europe that have very strong data access for healthcare data. So like in Norway, for example, the entire healthcare system, every act that's done in healthcare to basically everyone in the country ends up in a giant database. And so, it's if you're trying to develop a digital therapeutic leveraging like machine learning on data sets, Europe had a lot of the technologies that are really growing and being adopted in the U.S. actually were created through European data sources. So one of the key themes we're seeing are like European digital health businesses in mental health, in musculoskeletal health, in weight loss, kind of creating the products in Europe, but then trying to scale those products that were created and optimized on European data in the United States. So those are two key structural advantages. That's the development side. In the commercialization side, I think that there are important structural differences in every European country is different, but compared to the U.S., the actual sales process, there are similarities, there are differences, and it really depends on the individual product. I think the sales process is usually quite similar in the sense that whether you're in France, whether you're in the United States, if you're trying to sell capital equipment or a software product in the hospital, like you need a champion, you need to identify who are the actual decision makers, you have to influence all the right people and kind of progress your offer through a sales process. That's the same. I would say, there are, the mix of like public hospitals versus private hospitals, the level of like dependence or independence that individual hospitals have to make purchasing decisions varies even regionally in the United States. So it's hard to talk about the U.S. because there are like group purchasing organizations in some geographies in the U.S. that make it very difficult for new technology to be adopted. There are some that make it easier. And so it's hard to have an apples-to-apples comparison. But, within Europe, there's also huge differences between Germany and France. And so, you need like a strategy that's really tailored to the individual circumstances in the northeast of the U.S. versus California, in Germany versus in France.
Okay. So based on those disparities between kind of the commercialization and experimentation, what type of businesses do you think are uniquely poised to do well in Europe?
Areas that we're spending a lot of time in where we think Europe is particularly strong. So, and again, we don't just invest in software and medical devices. We also invest in specialty pharma, in tech-enabled services, and we also have a strong interest in fields like complex biologics manufacturing. So the way we invest is we try to like identify macro trends and themes where we think that there's going to be more demand than supply, or there's reasons to believe the market is going to structurally grow, and the tide's going to raise all boats. And then we rather than participating in a lot of processes, we try to go out and find companies that are in segments that we think are really interesting. And so, Europe has a strong legacy of high value added, high human capital manufacturing, and a lot of ingenuity and technology know-how around developing like machine tools and manufacturing inputs for example, things like complex biologics. And so even when you look at like where the acquisition roadmaps are for a lot of existing legacy platforms, Europe is a key focus because for whatever reason in Belgium and in the Netherlands, in France and Germany, there are a lot of small companies, often family-owned companies, that have truly innovative and transformational technology. And so that's one area that we're spending a lot of time in, basically because if you look at the likely market share of FDA approvals by category of therapeutic, complex therapeutics like cell and gene therapy are going to be more and more prominent on a volume basis. And rather than 1% of the sales price being the cost of goods, like it is for small molecules, in complex biologic products, like 30% of the price ends up going into its manufacturing, because there's just a lot more cash needed and bigger budget needed, frankly, to be able to put in place the logistics and manufacturing process to create those often highly personalized products. Other things in Europe, I mentioned earlier, digital therapeutics. I think definitely finding opportunities where access to unique data can create, interesting digital therapeutics products is another, key advantage that we have in Europe compared to the U.S. I think that the kind of legacy of early feasibility medical device work coming out of Europe has, there's a lot of infrastructure and know-how here, even on like the medtech innovation services side. So there's a lot of really interesting companies that provide software tools to help, or frankly, more traditional services like large animal testing facilities, biocompatibility testing facilities, prototyping facilities to enable medtech innovation. And that's been another area where we spent a lot of time in the last year.
Gotcha. So I want to pivot a little bit more towards the kind of investor fundamentals. When you think of like traditional VC, there's and especially in software and high tech, there's a number of data points that an analyst will look at when they're running due diligence on a company. I would imagine there are a lot of parallels in the health tech space, but I'm curious if they're outside of customer acquisition cost and next 12-month revenue, enterprise value, these kind of the classic acronyms that you hear in a discussion with other VCs. What other elements are you looking for some of these companies?
So I think the most under evaluated criteria in medical innovation is reimbursement, because fundamentally, there's two ways for a new innovation to be adopted by a healthcare system. Either that new innovation is like an incredible technological and clinical outcome revolution, where it's just like obvious and malpractice to not introduce it because it's so much better than what already exists. Even if it's not economically exciting for the hospital or the doctor, that innovation will eventually be adopted. What makes an innovation get adopted dramatically faster, even if it's truly only an incremental innovation, is if it can drive substantial more profitability to the hospital, to the physician, to whoever the kind of interested parties are. And I think a lot of times in medical technology investing, people fall in love with the technology or fall in love with the market size. And then like on a spreadsheet, you can say, oh, if I have only 1% penetration, like that, I look at how big my top line is. I think the reality is that, and I think a lot of people are pretty good at evaluating clinical and regulatory risk, where I think there's less knowledge and awareness out there, but I think is like the critical piece of the puzzle is understanding reimbursement paradigms and being able to understand what it's going to take. What is the money line for the hospital? What is the money line for the doctor? what's it going to take to actually get this thing reimbursed at a level that will make adoption not only a function of clinical results, but also of economic results from utilization.
Right.
Maybe I'm too American to be so transparent about that, but I think it's a reality in technology development.
Well, yeah, that refers back to the what you were describing earlier around some of the financial plumbing associated with the healthcare system. It presents itself as a barrier to entry if you're unfamiliar with it, but can pivot to an advantage once you've kind of figured it out and looked in the right places. Is that
100%? 100%. And I think you can also, there are a few, our job as investors is to say no as quickly as possible so we don't waste the entrepreneur's time and so we don't waste our time. Because we have a relatively small team and we have a huge amount of deal flow, and we need to focus on the opportunities that we think are most attractive. We have to focus on the opportunities where we think we can actually win the deal. Yeah. And I think, there are certain elements that are just straightforward. If it's not there, it's not right for our fund. And I think an attractive reimbursement profile is one of those things. Because you can Medicare, which is the payer in the U.S. that pays for healthcare for people over 65 years of age. Medicare is a wonderful organization that's well run, but it's highly unpredictable when your reimbursement paradigm will actually be adopted. Even the day that you get a so-called national coverage determination, until it's regularly in use within IT systems, you can be waiting, and then when do you start hiring the reps? Because when you don't have the reimbursement code that's functional and working, no one's buying the product. And so we prefer situations where that's kind of behind us, and we can instead focus on customer segmentation, lead qualification, and kind of getting the right people on the bus at the right time.
Yeah. Well, you mentioned deal flow. Without spilling the secret sauce of kind of how you source opportunities and qualify potential investments, can you talk a little bit about how that, what your experience is like in Europe? Are people coming to you? Are you doing a lot of outreach to identify these companies? I would imagine you're fairly differentiated in kind of the operational excellence you mentioned before, and the depth of the bench of your roster in terms of healthcare and tech investments. What does a typical deal look like? How are people coming to you? How do you qualify them? How do you move them through or disqualify them with efficiency?
Yeah. So we have the benefit of having a pretty broad mandate, which means that we can look at, like I said earlier, profitable and unprofitable companies, minority and majority companies, which gives us the incredible pleasure of being able to do a robust thematic sourcing exercise where we do an offsite twice a year. At the offsite, we define 4 to 6 themes that we're going to staff teams on. We take those themes, we break them into subsegments. We check the market depth of each subsegment. We focus on the subsegments where we think the business quality is highest. And then we proactively reach out to companies. And, in those situations, we're trying to we like being able to build relationships with managers and not be in an auction process where we're in front of people for 2 hours and we can't really easily evaluate whether our values are shared and whether we have a similar kind of thought process around strategy. Being able to find an opportunity that's not intermediated or that's not, that isn't sort of a deal that everyone's looking at gives us a little bit of breathing room to try to really do the right deals and really also pick people that we think are going to be category champions. So thematic sourcing is an important part of what we do. Of course, we're contacted out of the blue by companies. I don't think Lauxera, our firm, is like a particularly well-known brand yet. We're working on building that, but despite the fact that I would say we're not a famous firm yet, we do have quite a bit of deal inflow from folks that find out about us. And then of course we're especially in the world of EBITDA positive and buyout opportunities. Most of those deals are intermediated, and so we are contacted by banks and we see deal flow that way. We work very traditionally. We have a weekly deal flow meeting where we're qualifying all the deals that come in. And I think one thing that is important for people to know is often portfolio strategy plays an important role in how we're prioritizing deal flow that we see. So we're trying to build like a relatively balanced portfolio between EBITDA positive and EBITDA negative businesses. And so sometimes we're spending more time on a certain class of business, not because intrinsically like the business quality is higher or better. It's because we've done too much of this, so now we have to do a little bit of that. Like we did too much software, let's do more medtech. And so often like the reasons why we prioritize companies are really just related to our own internal plumbing. And I think one lesson that I always tell entrepreneurs raising capital from institutional investors is you also always want to talk to people when you're right down in their core strategy. You want to be right down the fairway. Like the moment that you're an exception, you're probably wasting your time and they're probably wasting their time. And so find the funds where you're like right down the fairway. And we have a pretty wide fairway for the reasons that I described earlier. But like I said, we're trying to get to know quickly so that we can really be focused on a team on the things that we like most and we have the highest likelihood of actually winning.
Yeah. Well, speaking of portfolio composition, there's so many subcategories in healthcare, and notoriously healthcare has been kind of a late adopter in terms of digital transformation. So I'm curious what areas might be the most underserved today in terms of tech-enabled or SaaS businesses that are supporting the healthcare ecosystem. Where do we need more innovation? What kind of companies are pique your interest as a potential kind of new entrant or category defining within the healthcare space?
So we're very interested in software and technology in the operating room.
Okay.
The reason for that, so we made an investment in a German-American company called Care Syntax, which is basically a digital operating system for the digital operating room. And it's a workflow solution that the surgeon uses to basically run the digital operating room. It also is a data lake. The data from all of the technology in the operating room is sort of siphoned into a data lake, and it's used. That data is sort of used in a number of use cases, including fintech applications. The company is a partnership with medical malpractice insurance providers. Technologies the data are also used for surgical education purposes, but like the kind of key, most important data being videos from the laparoscopic, endoscopic, and robotic surgical cases. And so, again, like the operating room is interesting because 55-60% of revenue from any given hospital comes from the operating room, and most of the known cause mortality in a hospital comes from the operating room. And so again, like it's a huge opportunity making surgery safer and also being able to increase the throughput of surgery are enormous untapped opportunities for improving hospital profitability, improving patient outcomes, both in terms of getting the benefits of surgery, but also avoiding, through better surgery, having the complications that can be associated with surgery. That's the operating room is one area where we think that it's radically underserved by digital solutions, and I think medtech is discovering that. The traditional medtech players, the Medtronics, the J&Js, the Strykers, the thinking 10 years ago was it's all about metal and plastic and things that we're sticking inside people, and I think increasingly the medtech majors have realized that in order for us to truly serve our customers and be able to be a solution provider within particular disease states and therapeutic areas, the software inside hospitals also has to be part of what we're offering.
Yeah.
In terms of other areas where we think there's huge potential for digitalization, one area is in product development for healthcare products. So on the pharma side and also on the medtech side, increasingly powerful tools to enable faster and more successful and better R&D initiatives. So we spend a lot of time looking at quality management system software, which can help improve the safety, security, and time to market of medical technologies, for example. We also spend a lot of time looking at software that's used by pharma companies for the development of new assets. So technology for, we don't spend a lot of time looking at kind of black box solutions that are ideating new molecules. We prefer the stuff that's sort of used by researchers routinely. Macromolecule visualization software. We like more like investing in the refrigerators than the actual clinical program. I'm not sure if that sort of makes sense.
Sure. Yeah. Well, the first example you gave on care syntax, the idea of building software for an operating room. I mean, it's obvious to me why it would be hard to do and why people probably haven't done it historically. But just from a product manager standpoint, thinking about how to build, like, what is the user workflow for like a surgeon in an operating room and getting the data in and out and what the experience might be for them is pretty fascinating, because I mean, you see surgeries on TV all the time, but I think if you ask 9 out of 10 people on the street, they probably haven't been in an OR or understand the experience there. So it's pretty wild to me that I think it's a good direction to go, obviously, but certainly a challenging one.
I think in healthcare technology development, you need to listen to the customer. I mean, it's true in every field. You have to listen to the customer, and you need like a multidisciplinary team that brings to the table like radically different skill sets. And then I think you need to like iterate the product by using it and learning what works and what doesn't work. It's the same as in any field. It's just in healthcare, maybe the development cycles take a little bit longer, because even getting prototypes into the operating room requires some regulatory approvals and requires maybe longer and more painful kind of constraints than adopting software in other jurisdictions. That's also why we're more of a later stage investor. More mature healthcare assets are expensive. Like successful mature healthcare assets are very expensive. That's the delta we're trying to capture. Most of the companies we're investing in have been around for more than 10 years.
Okay. Well, to that end, I kind of want to wrap up this section on investing with the concept of ESG principles that are baked into your investment philosophy. It's also a core pillar of Revaya, the VC that I work for, and their philosophy. I'm curious how that applies in the healthcare space, what that means for you, and also how that impacts your time horizon for these investments. You mentioned you're investing in late stage companies, so naturally there's probably a 5 to 10 year kind of vesting period typically. So tell me a little bit about kind of how you think about ESG, and then how that might impact the timelines around your funds and potential liquidity events.
So obviously, ESG is absolutely central to what we do and how we operate. Also, impact is something, you didn't mention that, but impact's also something that we care a lot about. We're not an impact fund in as much as our carried interest payment isn't measured by impact criteria. It's measured strictly by financial performance. That being said, for every investment that we make, we define impact metrics that we measure on a quarterly basis and we put into our reporting. And so, impact's important. ESG, we take it very seriously. We have an ESG committee that regularly meets. For every investment that we make, we have a dashboard of the ESG initiatives that we try to implement. I mean, unfortunately, I'll just give you an example. Generally, when we enter companies, because of just you look at statistics, often there's a huge gender imbalance on boards.
Right.
We also we care a lot about the G side as well, like corporate governance and having the right boards present, the way that conflicts of interest are handled. That's something that we absolutely care a lot about. In terms of the impact that like ESG criteria have on the time scales of our investments, to me it's a little I don't see like an incredibly strong link. For us, we're later stage investors, so I would say our typical holding period is called like 4 to 6 years. If there's an opportunistic reason at a great price to exit earlier, of course we'll do it. I think I don't think respecting ESG, an ESG approach to monitoring companies really has much of an impact on when we exit them, to be honest. I think it takes time sometimes to implement some of the key changes we want to make to improve the quality of the ESG elements within our portfolio companies, but I don't really see that being very aligned to kind of the timeline for exits.
Gotcha. Yeah, my experience with ESG was partially that. I mean, if you kind of zoom out a little bit, the idea is that you're looking to build a better future, a more positive and diverse and inclusive future. And so, for some reason, in my head, I've kind of linked ESG principles with a certain long-term outlook on the investments you make. But I totally see what you're saying. It's somewhat indirectly linked, and I don't think it should have an influence on the way that you operate the business necessarily. You don't need to hold on for no reason if something's not working out, right? Okay, I want to kind of move into a couple of closing questions here, more on some of the big ideas in tech and investing, and in this case, particularly around longevity research. So we've talked about this briefly in passing, but it's something that I see on Twitter all the time, on TikTok. There's all types of research ranging from, are you real fundamental research, and then some of the stuff that's more, some sort of multi-level marketing scheme to buy pills that are going to make you focus more, last longer, or give you the fountain of youth. So I wanted to kind of get your gut check on longevity research in general. What's actually what's real out there, and what promise does this have for the human species in the next decade? What can you expect us to witness?
Yeah, so when I was a student at Harvard Medical School, one of my professors was a guy named David Sinclair, who showed us very compelling evidence that basically in like every species that this was tested in, caloric restriction increases life expectancy because there's like less free radical, metabolism kills us, metabolism causes free radicals, which damages our DNA. And so, these ideas have existed for a long, long time. I think, there's certainly, if you think about like aging, it's a biological process that occurs because of biochemistry, presumably because of like biochemistry and cellular biology and presumably if we had like the right fine tools to impact the biological processes that are making our skin change and making our muscles change, we could have an impact on them. I think the kind of like reality of where science is today is that if you look at like the last 20-year history of so-called longevity companies, the life cycle of their equity story goes like the following. We're a longevity company where we're going to develop therapeutics that are going to make people live longer. And then like 3 years later, we're actually a diabetes company and and the reason for that is very simple because you can't run a clinical investigation that shows that you increase people's lifespan because it takes too long. And measuring those outcomes it requires big sample sizes in decades, and so it's just not feasible unless like it's the government that's running it, NASA. For any sort of economic actor, it's not tenable. And so I think you can raise your seed round, you can maybe raise a pile of money from high net worth individuals, et cetera. But I think when you actually like sit down to try to develop longevity products that you want to actually validate clinically, it's just there are like methodological limitations in the world of like clinical research that make it complex. So I'm not, we don't invest in therapeutics. But if you were to ask me what sector, I think longevity defined by like extending the number of years on Earth of people, that's tricky. Longevity defined as like aging in better health, that to me is radically different. And there's a lot of digital tools, fall prevention, digital therapeutics to help people that have back pain. I mean, there's aging in a healthier manner with products that are focused on individual aspects of the aging experience, of course there's going to be huge transition. But the idea of like swallowing some pill that like magically reverses aging and I'm going to live longer, I think the only thing that does that to my knowledge is caffeine, at least based on an article that I read a few years ago in the New England Journal of Medicine, where overall mortality was decreased by in people that drank more caffeine than less caffeine. So go ahead and drink coffee in the morning.
Yeah, in that case, I'm going to live forever, I think. Well, that's good news. I want to close out on one question from one expat to another, which is, what has your experience been? You've been in France for 10 years now, and this doesn't have to be exclusively tied to your experience in France, but as an expat, both as a founder and an investor, what has your experience been? Are there advantages, disadvantages, pros and cons? What do you like about being an expat, and how does that influence or give you a different perspective than perhaps your peers that you work with here in France?
That's a great question. So I love being an expat. I think that most people that are expats have trouble not being expats because, like, fundamentally the fact that we're expats living in someone else's country makes us interesting. And like when you and I are in America, we're just like someone else. When you and I are in France, we're sort of special. I think that my wife is French. I have 3 children. They're growing up in a bilingual environment and are kind of bicultural, I guess. I think operating in a foreign country, my wife and I have been married for 11 years. The fact that we have cultural differences is still like an animating and enlivening part of our relationship. I like the challenge of living in a foreign country. It's like I'm pretty far up the learning curve at this point, having been here for 10 years, but I just think it's sort of exciting and challenging to try to like make your life work in a foreign country. I had to become a what's called a gérant financier, like the French SEC, the AMF. I needed to get like a license to be an investor here, and so I had to take a giant standardized test in French, which I passed. But I was very proud of myself because I had to learn the material, but I also had to do it in French. And so that like extra challenge, I raised with my colleagues a $300 million investment fund where 60-70% of the meetings were in French, and that like extra kind of like linguistic challenge was fun. It's not. I'm not saying it's easy. And the last point I'll make is just people think that France is a bad place to do entrepreneurship. They're absolutely wrong. We have a number of like big structural advantages in this country. One of them is the French sovereign wealth fund, the BPI, and they're an important anchor investor in our fund. They invested in our fund, I think, partially because of their strategic interest in having more health technology specialist investors in France and in Europe. There is no American sovereign wealth fund to write a big check into a first close in the United States. And I think there's also like a little bit less competition. I'm very proud of what I accomplished at Allurion, but there are more people like me in Boston than there are in Paris. And so it's sometimes nice to be like a slightly bigger fish in a slightly smaller pond. So it's a good place to do entrepreneurship for sure.
Those are some good points. I can identify with a couple of them. So I think that's a good place to close. Thank you so much for your time. I really appreciate it. And we'll be in touch following along your journey.